Okay, grade 12 for 3.17, you need to be reminded what the difference is between a perpetual and a periodic inventory system. So for perpetual, that's normally your big companies, Pick and Pay, who has barcode systems and computers running their system. And then periodic, I said, would be like a Chinese shop. She's got a till, but it's not necessarily connected, it isn't connected to a computer. It's just a normal till calculating your selling price. So say, for example, you've got your stock, you've got 10 Cokie pens, and you work with a perpetual system. So now your customers come, and during the day, some of them go, your pens go, there they go out of your shop, customers bought them. What did you do with those 6 that you've sold? When you sold it, you recorded the selling price as well as the cost price. So in your books, you can see the value of the stock that you've sold, and then you would immediately know what is the value of the stock that is left behind. But when you go to perpetual, it's a different story. So now you've got your 10 stock, and you know that's what you started with. That's all you know. That's what you started with. And then during the day, somebody comes take 2, another person comes takes 3, another person comes take 2. So now you know, only thing that you do know is that you've sold 7 Cokie pens, and you know the selling price of those. You don't know, you didn't record the value of those 7 Cokie pens, meaning their cost price. So the problem here is you don't actually know what's the value of the stock that should be sitting on your shelves. You can look at your shelves, but you don't necessarily know the value. So for instances, you could have sold only 5, but because there was theft, 2 gone missing. But you've got no idea of knowing that, because nowhere you recorded the cost price for these items, so you can't compare it with what you're counting on your shelves and what your books say. Okay, so that is the problem with perpetual, just a brief overview. So then I'm going back to grade 11 textbook just to give you a quick update here on what was the big differences. So I'm going to run through the perpetual first. You have got better control. This is Pick and Pay. The stock movements, you always know what's going in and out. Theft, leakages, you can easily pick up, just check on your computer and then go to your shelves and see if something's missing. The thing here is both are recorded when you buy something and when you sell something. It is recorded at cost price. And then the last point here is it's computerized, it's got barcodes, and you need special equipment, which can sometimes be a negative for small businesses. Then I'm going to the periodic. There's no outlay of expensive equipment. So if you don't have, and you're a one-man, like a sole trader, then you don't necessarily have the cash to run that, to put that out. Because you need actually a special system to be running at something like a pastel. It is not necessary to calculate your cost of sales. It does free you up, and it's much easier at some place like the Chinese shop. I mean, they're selling, or they used to, not at the moment, selling lots of stuff. And to calculate the cost price on every single one of those would be painful. And then they can't easily detect if things have gone missing. I think therefore you need proper cameras and stock take done regularly. And then the last point, it's difficult or not feasible to determine the cost price of every single item, like I've mentioned already. So those are your key differences between the two, just looking at the theory. Now I'm going to go to the actual exercise. I'm going to 317, the one that you have to do. If you look at your trial balance, what is sitting here that looks unfamiliar that you don't normally have? Trading stock has got a date next to it. It says the 1st of March, you're now in February. So this means this 64,800 is what you began with. This could be your opening stock for your trading stock. Then in your nominal section, you've got 2 accounts. You've got purchases and you've got carriages. Now you should know that when you are looking at perpetual, purchases and carriages are shown separately. When you used to do perpetual, whenever there was a cost to get the purchases to you or the stock, you would just add it immediately into trading stock, and it would sit inside trading stock. In this instances, they show 2 separate accounts. Okay, and then if we turn the page and we just see some of the adjustments that are relevant to stock, let's just quickly glance over them, and then I'm going to show you what happens. The first one, number 6, is the bookkeeper didn't reverse the opening balance of your trading stock. I'm just going to focus on trading stock. Basically what that means is the trading stock that you saw on the previous page. which was here the 1st of March, has not yet been adjusted, meaning beginning of the year, you'll show your trading stock as the opening stock. At the end of the year, you must change it to the closing stock. So if you go a little bit further down to number 14, you will see there it says your stock on hand for your chemicals is 69. This is your closing stock, and the one that you've seen in your trial balance will be your opening stock. You're going to need both those numbers to work out your cost price, because what's missing here is a cost of sales, and those two will help you to figure that out. Then I'm going to adjustment number 9. Okay, sorry, I was interrupted there. I was with number 9. So number 9 talks about effective stock. So that, and the word returned is used in there. So that's the stock that I'm going to minus from purchases. You'll see just now. And also what I'm going to minus is number 11, where they talk about I'm going to donate some stock to a school. That means my purchases will also go down. So those two I'm going to minus from purchases. Jumping in the middle to number 10. Number 10 mentions some transport costs to get the stuff from my supplier to me, the shop, 170 Rand. And that is going to show in also in a calculation. Okay, so let's see what it actually looks like in the financial statements. So if you go to your income statement, you need cost of sales. And in order to get your cost of sales, you first need to do this calculation. This is a calculation that we need to know very well and that we do often. You get a lot of marks for this one. I've mentioned the opening stock is that number from the 1st of March in your trading trial balance. And then the closing stock was mentioned under number 14. They said that's how much stock you have on hand. So those are your two numbers I discussed earlier. When you come to purchases, you'll see you bought for 430. This is the trial balance number. The return that I mentioned was number 9, and the donation that was number 11. Those two are bringing your purchases down and brings it to 426. Adding to your purchases, though, you've got some carriages from the trial balance, and then this additional one of 170 that you had to pay to get the stuff from the supplier to you. So add that to your purchases because it increases the value of your stock. And then minus the stock that you didn't sell, you end with 437. That's how much your cost of sales was for the year. And that's the number you put there. Just coming back to this 170. Also number 10, they do mention that there was 100 Rand for stuff that you needed to get to a customer. So now it's going from you to the customer. It's got nothing to do with the purchases. This has got more to do with selling the stuff. So what we're going to do is we're going to have an account that's for expenses of delivery, and this will refer to your debtors or your customers. And you'll see they added the 100 Rand there, not at the top. Let's look at the notes and just see what goes on there with these two numbers. If you go to trade and other payables, they are saying we still need to pay that delivery company, so it's 170 and 100 Rand. If that delivery company was a creditor, you would have gone up there, but they're not clear on that. So I would have marked it right if you put it there or there. And then finally, if you look here at the top at note number 4, where you actually do record your trading stock, you've got your opening balance that you started with, take it out and put the new opening balance in, which is your closing stock, 69,500. And that's it.